What's the difference between term and whole life insurance? Let's get right into it. That's a huge difference. In fact, we actually call it death insurance versus life insurance. It's that big of a deal. So I want to talk about three things in this topic today. I'm going to give you the definitions and distinguish the difference between term and life insurance and whole life insurance, the benefits of whole life and how that actually instigates or creates or expands, all those words, generational wealth, and actually loads up a trust. It's how many people have to do it. And number three, why term insurance is not a really great long-term financial strategy. Although lots of people like to put you into it, it's cheap. You can afford it for 15, 20, 30 bucks a month. Most of the time you're burning that cash because you're going to outlive it and you don't have anybody sophisticated enough to actually do a transfer of that policy. That can happen depending on who the base term policy came from, where you could up-level it into a whole life later as you make more money and can afford more. But let's begin with the definitions, and I'm actually going to read them to keep them very clear. So, term insurance, right? Advertise low rates, as I already said, pays out on death, making it's essentially death insurance. And that's it. There's no benefit. You can't borrow from it. You just pay in a little bit every month. And you don't die in that 20-year term. You should calculate how much money, if you compounded it, you could have had put away, but you didn't. You just blew it. Bad. Whole life offers not only a death benefit, but a living benefit known as cash value. I'm going to talk about that more in a minute. Cash value is in the whole life policy is accessible during your lifetime. So you can borrow against it. You can use it as a bank. You can actually loan it to other people. You can buy real estate with it. You can buy other assets with it. It's phenomenal. So the whole life policy is cash value, makes it really, really versatile. There's also another version of whole life cash value, which is the kind you pay in quite a bit of fees. So it's got to be during your big, heavy money-making years. Like you're going to spend anywhere 5, 10, 15,000 a month in, but later, once you spend 10, 15 years paying in, you get 10, 15 years pulling out more than you put in. So for example, I know policies that people are paying in 10,000 a month, 10,000 a month, 10,000 a month. They're going to be able to pull 22 to 28,000 a month later in life, and that's tax-free money to you. Huge estate planning and later life planning. It's also a great recession-proof asset. Now, I'm not giving you any advice. I'm just telling you my opinions. You could already know where I lean. I don't have term insurance. We don't endorse it. It's just a waste of money, and it's just for your death. So why not have both? Why not have it become a bank? Cash value you get to use, and then upon death, you still get the death benefit, which then could load up to your trust, which loads up to your heirs for later. So sometimes to create generational wealth for some of you who haven't created a lot of income in their life or invested in a lot of assets without a big investment portfolio, the way you can actually make your kids millionaires is upon your death. So you qualify for $1 million policy, put it in a trust. Upon your death, the kids now get $1 million, and you've just made at least one of them a millionaire. So other benefits of whole life, right? I'm just going to continue on because I'm going to make this accurate. My partner, Jason, is somebody you're going to have a strategy session with. So his Calendly link is in the description below. You actually can also go to our search bar, look for any of the insurance conversations. You'll see Jason and I there. We're partners in this company. We do it a lot. Other benefits of whole life is it guarantees no loss of money and offers a guaranteed growth depending on certain policies. You can actually guarantee and lock the amount that it makes you per year. You won't have as much later, but you can put a guarantee in there. It provides huge liquidity for those of you who need to be pulling. Tax-free and tax-deferred growth upon when you actually pull it out. That's the biggest benefit. See, a lot of you're overloading your 401ks, but your 401k is going to be taxed as you pull it. And it's going to be taxed at whatever the local government rate is at that moment. What you do in this situation is you put money away. That is after-tax money. In some situations, you can actually make it a business deduction. Right? So it actually can be a deduction and expense against your income. And in most of those cases, later life pulls, and then when you actually get that money, it's tax-free to you. So again, a lot of you just don't understand money. You don't have a mindset issue with money. You have a lack of knowledge issue with money in so many categories. It's why we exist, why we're here. If you'd like to meet Jason, also he attends every Millionaire Intensive with me. So I'm giving you 2 tickets to our Millionaire Intensive. Come meet him. We don't talk about insurance a lot there, but you'll get to know how cool he is, and he knows a lot. And he has been doing this in bankable, infinite banking insurance is what we call it, for decades. Very, very well versed in it. The other thing that I want to talk about with whole life that can provide is in some situations, depending how it's structured and your trust is structured, your corporations are structured, if you had any litigation, it actually could become an asset protection vehicle for many assets that are within that policy. So a lot of benefits to be looking into it. At least have a conversation with Jason. Check it out. It's what we do. It's how we live. Now, before I go on, I want you to subscribe to this channel. I want you to click the notification button. I want you to be here 5 days a week. I want you to share this with a ton of people. Like, if you want people around you to be in this smart conversation about money and business, you don't hide and say, oh, I want to start a company privately. You actually live out loud about it. You talk about it. You share it. You get people to hold you accountable to what you want. And all those other naysayers, you just have to atrophy them out of your life. And a lot of you probably have to get those 5 closest people out of your life sooner than later. And you just keep doing the same thing and you wonder why you get the same result. Now, back to the last point. Why term insurance really isn't a long-term planning solution. It's only here until you die. And again, it's a death benefit of which most of you are going to outlive it. And the problem with a lot of those base cheap policies is they don't have a transition to a whole life. They don't have a transition. So everything that you put into it is just lost. So, and that's 90% of, there's only a few that are base policies that actually have both sides of those insurance vehicles that can move you from one to the other. So make sure that you have some transition later or you're just blowing it. Most of the stuff on TV is horrible. It's cheap, it's death insurance, and there is no transitional ability to any of those kind of assets, and you cannot borrow against it. So again, whole life gives you that opportunity to load up trust upon death. And just a tip around generational wealth for those of you who have multiple children, and especially if those children do not think the same or going to behave the same. So to avoid a later, upon your death, war amongst those kids, just give them each a trust. Yes, it costs a little bit of money, but you're going to give them hopefully hundreds of thousands, if not millions of life insurance upon your death that will easily have paid for a trust. So each kid can do their own thing with their own trust money, their own life insurance money, and they're not going to go to war fighting about it, which is why most generational wealth plans only last 2.3 years, which means your grandkids never get any because they go to war. Because the trust wasn't set up and wasn't enough segregation upon how you raised them, what their goals were, and what their intentions were. Because the last thing we're going to encourage you to do is have a trust fund baby. If you have any questions about any of this, I also have a very cool program. We did a 3-day event on generational wealth. So I'm going to give you the link to it. You do have to go buy it. It's very cool. It's 3 days, the most comprehensive generational wealth planning you ever seen, from estate lawyers to tax strategists, the whole, I call it Power 5 team that puts a generational wealth plan together. So go click on that link, grab our generational wealth program, and enjoy for 3 days with you and your family. If you have any questions, go to askloral.com, ask a question, make a request, and I'd love to see you back here tomorrow. I'll be right here.